The number of bank statements you need for a home equity line of credit, HELOC, depends largely on how you earn income. Traditional W-2 salaried borrowers usually only need a few recent statements, whereas self-employed or alternative borrowers must provide more history. Retirees and seniors might even qualify with little to no income documentation through special equity-based programs like Truss Equity Select. Hello, I am Jason from Truss Financial Group, and today I will break down the typical bank statement requirements for various HELOC programs. First, traditional HELOC. Most lenders ask for 2 to 3 months of personal bank statements to verify steady income and cash flow for W-2 earners. This brief history, along with pay stubs, is usually enough to confirm your income if you have a conventional job. Second, bank statement HELOC, self-employed borrowers. You'll typically need 12 to 24 months of business or personal bank statements if you're self-employed. Lenders average your monthly deposits over this period to gauge income stability. This program is ideal for freelancers, gig workers, or business owners who don't show much income on tax returns but have healthy cash flow. The extended statement review gives a fair shot at qualification despite high tax write-offs. Third, no-doc or alt-doc HELOC. These alternative documentation programs relax the requirements. Some no-tax return HELOCs don't require full bank statement histories at all. They might only review a few months of deposits or asset statements and skip W-2s and tax returns. With just light income verification or digital income analysis, such no-doc options let qualified borrowers tap equity without extensive paperwork. This flexibility often comes with slightly lower maximum LTV loan-to-value limits to offset the higher risk. Fourth, no-appraisal HELOCs. These programs skip the traditional in-person appraisal and use AVMs, automated valuation models, to estimate your home's value digitally. If you have good credit and solid equity, this can save you time and appraisal fees, often a few $100s. It's a faster, smoother process with less paperwork, making it ideal for homeowners who want to move quickly without waiting for a full home inspection or scheduling delays. Fifth, high-limit HELOCs. For very large HELOC credit lines, often $750,000 or more, lenders may ask for more extensive documentation or longer bank history, depending on your credit, equity, and LTV ratio. Higher loan amounts entail more risk, so strong financials and more proof of income assets might be needed. Many programs cap HELOC amounts around $750,000 based on home equity and credit. Only specialized jumbo programs go higher. Sixth, digital or online HELOCs. These modern HELOC programs streamline the process with online income and asset verification. Instead of mailing documents, you can link your bank account securely for instant verification. Many also use automated appraisals instead of in-person appraisals for property value. The result is faster, easier qualification, often with no paper statements, no tax returns, and even no appraisal needed. Some lenders can approve and fund HELOCs, up to approximately $750,000 within days. Now let's talk about Truss Equity Select, 55 plus years old program. For homeowners age 55 and older, a unique option called Truss Equity Select offers a HELOC designed specifically for seniors. This program is equity-driven, meaning it focuses on the value of your home and available equity rather than requiring high income or extensive bank statements. It's essentially a first-position HELOC that blends the flexibility of a credit line with the security of a fixed-term loan, tailored to seniors who are house-rich but cash-tight. Key features include easy qualification based on equity. If you have substantial home equity, you can qualify primarily on that equity, even with limited income. This equity-based approach means no W-2 income is required as long as your property value and credit meet the criteria. Low minimum payments. During the loan, required payments can be as low as approximately 1% of the outstanding balance. This ultra-low minimum keeps monthly payments manageable on a fixed income. For example, a $200,000 balance might have a minimum approximately $167 payment. Flexible draw period, 7 years. The HELOC comes with a 7-year draw period during which you can borrow as needed for expenses like medical bills or home repairs. You only pay interest on what you actually draw. Capped long-term repayment. Truss Equity Select offers capped payments for up to 40 years after the draw period. This ensures predictable, steady payments and no payment shock for the borrower. Non-recourse protection. You or your heirs will never owe more than the home's value. Even if housing prices drop or the loan balance grows, the lender cannot demand more than the home's sale proceeds. You keep full ownership of your home, and any remaining equity belongs to you or your heirs. Truss Equity Select functions like a financial safety net for senior homeowners. It allows those 55 plus to unlock their home equity on their own terms, with flexible access to funds, minimal income proof, and safeguarded repayment conditions, all while staying in their home and preserving equity for the future. If this sounds like something you'd benefit from, feel free to reach out to us at Truss Financial. We'll help you figure out the best fit. Now that you know what lenders are looking for, here are some practical tips to help you prepare your bank statements before you apply. These tips will make the process smoother and help you avoid red flags or last-minute hassles. Keep business and personal accounts separate. If you're self-employed or have side business income, run those earnings through a dedicated business account and use a separate account for personal expenses. Don't mix them together. Commingling funds can complicate things. It makes it harder for the lender to figure out what your true business income is, and it might even reduce how much of your income they count, since business expenses could muddy the waters. Maintain a healthy balance. Try to avoid letting your account balance drop to near zero if you can help it. Lenders like to see that you have a cushion or emergency funds. In fact, many want to see that after you get the HELOC, you'll still have reserves equivalent to a few months of payments in the bank, often 2 to 6 months worth of your housing payments. This isn't something you typically have to prove with a specific document unless asked, but it will show up in your statements naturally. Avoid large, unexplained transfers right before applying. Moving big sums of money around can raise eyebrows. For example, if you suddenly transfer $50,000 into your checking account from an unknown source a week before applying, the lender's going to ask about it. Ideally, in the few months leading up to your HELOC application, keep things steady. Provide clean digital statements. When it's time to hand over your bank statements, get them directly from your bank's website if possible. Download the PDF statements, usually the official monthly statements, so that they are complete and clear. These official PDFs have all the info, your name, account number, institution logo, which helps verify authenticity. This can speed up the process and reduce the paperwork you need to upload. Whichever method you choose, make sure what you submit is legible and complete. Be ready to explain any irregularities. Life happens. Maybe you had one odd month with a huge medical bill, or you received an insurance payout, or you sold a piece of equipment, and that's why there's a big deposit. Underwriters are trained to spot things that aren't typical for you, and they will ask questions about those. The best approach is to be proactive. If there's something that stands out in your statements, like a one-time large deposit or a brief dip in income, consider writing a short letter of explanation to include with your application. It could be as simple as, in July, you'll notice a $20,000 deposit. This was from selling my car, not regular income. Being upfront and transparent can prevent delays. It shows the lender that you have nothing to hide and helps them get comfortable with your financial story. By following these tips, you'll present your bank statements in the best possible light. Essentially, you're making the underwriter's job easier, and a happy underwriter means a smoother path to HELOC approval. Remember, lenders are just looking to confirm that you can handle the payments, and your bank statements are like your financial story that help them do that. By keeping your finances steady and submitting clear documentation, you're setting yourself up for success. If you have any questions about HELOCs or want to explore your options, we're here to help. Contact us at Truss Financial Group to get your HELOC started. Our team can walk you through the process, tailor a HELOC solution to your needs, and get you on the road to achieving your financial goals with confidence. Thanks for joining me, and good luck with your HELOC journey.